Equities fall in line with global indices to snap a 4-day winning streak. Sensex drops over 100. The Nifty moves closer to 10,800. Midcaps outperform.
Crude oil prices ease marginally after Brent crude price hits the $61 mark. The rupee remains largely steady against the dollar, ending at 70.41. Yields shoot up to end near 7.5% levels.
TCS delivers a mixed bag in the third quarter. Dollar revenue largely meets estimates, but margins miss expectations by a bit.
Bandhan Bank reports a stellar set with net interest margin coming in at an all-time high of 10.5%. The stock ends in the green. IndusInd Bank, on the other hand, loses in trade after brokerages downgrade earnings expectations.
Auto stocks gained today after logging in days of losses. Nifty Auto Index ends 0.3% higher, with Eicher Motors leading, Ashok Leyland and Mahindra also in the green. Well, those were the top 5 headlines from Dalal Street on a day when indices zigzagged and ended up in the red after 4 days of gains. Hello and welcome to Markets Today Talk Back, the show where we tell you everything that happened in those 6 hours in 5 headlines. I'm Latha and with me is my colleague Prashant. Hi, Prashant.
Latha, hi. Over the next 30 minutes, as Latha pointed out, we will talk about the drivers for the market, what happened, which sectors moved and why. Our guests will take your questions. Joining us to answer your questions are Mitesh Thakkar on the charts, Prakash Devan on fundamentals. Gentlemen, both of you, thanks very much for being with us here on the show. But before we get to the Q&A part of the discussion, let's quickly take a look at what really happened as far as trade today is concerned. Latha.
Well, it was a mixed kind of performance because you saw the big indices doing reasonably well. The big indices doing badly and the mid-caps ending in the green. The global markets actually had was one reason why you perhaps had some headwinds, because Asia and Wall Street, Asia and European indices both ended in the red, and you had crude, which was also a headwind. So, after 4 days of gains, it looked like a very good combination with global indices falling and crude rising for the markets to take profit. The fact that it was expiry of the weekly Bank Nifty futures also perhaps added to the pressure of profit taking. So banks took, it's not 34 days, it's 4 days of gains. After days of gains in private banks, you saw that was the one that saw a goodish bit of profit taking, especially Axis, ICICI, Kotak, and even IndusInd, where people were a bit unhappy with the fact that there could be greater provisioning in the coming quarter. The one that stood out was, of course, a stock like Bandhan. So mid-caps generally outperformed, and over there you had Bandhan, of course, doing well, but a bunch of other stocks which had been beaten down considerably saw a little bit of gaining today. So some PSU banks were in the gaining list. Basically, mid-cap stocks did well. But you have more color in terms of which kind of stocks?
Yeah, absolutely. Private banks were under pressure, Latha. So, I mean, as you said, real estate was another sector which was under pressure. And there was the energy pack, which now for the second day running has been under pressure. I mean, actually, the top 3 losers in the Nifty yesterday were all oil and gas stocks, and it wasn't any different today. So, Nifty losers, HPCL topped the list. There was IndusInd Bank, which was down 2.25%. Giving back and some more from yesterday after yesterday's gains. Grasim was lower. Bharti Infratel was down. There was Maruti, which was down about 1.33%, and Kotak, which left off 1.5% lower as well. So lots of more than a few private bank names there. Nifty gainers, Titan did well. Tata Motors was higher, and there was Eicher, which ended up actually, except Maruti, there was more green than red as far as large auto companies are concerned. Broader gains coming in from Bandhan Bank. So second day of recovery, small recovery relative to the fall it has had. Linde India, there was news there. Corporate action 8.25 higher. Viatech Vabag was up strongly. Max Financial was. Okay, that is Motilal as well. I'm talking about Max Financial, which was a big gainer. RCF and AU Small Finance Bank were the other decent-sized gainers with volumes. Latha.
Okay. Well, actually, Bandhan, probably the contrast is that Bandhan declared its exposure to IL&FS and took the aggressive provisioning. IndusInd left some provisioning for the coming quarter, and maybe that's why the very different reactions. to the two banks. We'll, of course, discuss all that. But first up, let's get from our guests what they have made of the markets. Mitesh, first, your technical analysis of today's session and what would your key takeaway be for tomorrow?
So I think last few days what we have seen is a range contraction happening in the Nifty. Now I think the counters would be 10,980 on the upside to roughly about 10,720, 25 on the downside. And I think from 10,950, I think we've come up about 50-60 points on the upper range. My sense is that this contraction might continue for next 2-3 sessions. And then I think we might get some kind of a directional bias. A similar kind of movement, while the Bank Nifty has been outperforming, but a similar kind of movement is happening on the Bank Nifty. It's an upward sliding contraction, so 27,800 is the upward boundary and 27,250 is the lower boundary. For the timing, I think a fresh breakout will take place only if the Bank Nifty starts stabilizing about 27,800. Till then, I think it might also get into a mild contraction.
Oh, okay.
Okay, that's a broader setup, range contracting, becoming smaller. The second headline then, oil prices seem to have found their footing, I mean, some sort of a bottom as the rally continues from the lows. Oil prices today near the $61 per barrel mark. On the back of that, rupee was steady at one point, but it did underperform other currencies against the US dollar. It ended at about 70 rupees and 41 paise. Yields shot up, ending near the 7.5% levels.
Okay. Yeah, the yield market had a little bit of a problem perhaps with crude, but largely, okay, 7.48. The new 10-year is coming up for bidding tomorrow, and that's obviously preferred over the old one. That's one reason why there's some pressure. Mitesh, actually, can you give us some levels of the rupee? Today, after the weakness, it ended up actually the dollar becoming 5 paise cheaper. What's your sense of the rupee's trajectory?
So I think Prashant, when the rupee was depreciating, I think 69.5 was a level which was a very important level, and there's a technical gap around the 69.20, 69.17 zone. So I think the 69.20 to about 69.5 would be a very important support for the dollar. I think as long as that is not being breached, and in fact in the last 2 weeks you would have observed a couple of times you've come to around 69.70, 50 zones and then see the rupee start depreciating again. So I think that's the level to watch out for. Unless that is being captured, I think I would bet possibly on some more rupee depreciation happening every time we are below 70 and yet not getting past 69.20 on the upside for rupee.
Okay, Mitesh, thanks very much for that. We've got a question coming up, actually, a stock-related question. K. Malinathan has sent us this question through an SMS. He's been holding 208 shares of MOIL. His cost is 207 rupees. He's a medium-term investor, has been holding these shares for the last 5 months, wants to know what to do. 208 shares of MOIL, cost is 207 rupees. Prakash?
So, Prashant, this is not a stock that really features as a favorite for anybody for the simple reason that it's underperformed, under-delivered for a fairly long time. At least the last 3 years, if you see, while other stocks in the same genre have really done well and delivered. So my sense is, while his waiting period may not be very high, he could probably continue having to wait a bit too long. And the metal cycle, in any case, is not very encouraging. We've already started seeing signs of a little bit of tempering of demand and particularly the ferrous side has reacted. Maybe, the manganese side will also, the non-ferrous will also start kicking in. But I would recommend that he could probably get out of this and move into something else, let's say something much more specific in terms of a growth spot like Hindustan Zinc. If he wants to be within metals, if he wants to be outside that sector, of course, there's lots of choices. But within metals, he could probably make a switch from oil to Hindustan Zinc and they would be better off.
Okay. Thank you very much for that, Prakash. The big story of the day was, of course, TCS, a story in the making. Results came after market hours and the company delivered a mixed bag in the third quarter. Constant currency growth coming in at 1.8% quarter on quarter was kind of in line with estimates. Margins perhaps could be considered a miss because of cross-currency headwinds. Let's straight away go to Reema Tendulkar to read us all the key features and takeaways from the numbers. Reema.
Thanks for that. Let me run you through the top 5 takeaways. Net numbers are lower than estimates because of a margin miss. And the margins are missed, one, on account of cross-currency headwinds, and secondly, on account of a higher cost of doing business. Their subcontracting costs have gone up. As a result of this, their margins have come in lower than estimates by more than 110 basis points, declining on a sequential basis. So that is the key negative. The other positives or in-line factors in the numbers, one, the constant currency growth at 1.8% on a sequential basis, on a year-on-year basis at over 12% growth. This is the best that we've seen in the last 14 quarters. So growth continues to be fairly upbeat. Digital momentum is strong. So this quarter, the company has seen more than a 50% year-on-year growth in their digital revenues, which now contributes 30% to their top line. BFSI continues to accelerate. BFSI growth this quarter was at 8.6% year-on-year, which compares with a 6.1% growth in the September quarter versus a 4.1% growth in the June quarter. So it was troubled last year, but now it seems to be on course and is coming close to the company average. Fourthly, the order book and the large client growth continues to be quite strong. So the order book is accelerated to $5.9 billion versus $4.9 billion, and the $100 million client addition continues. So this quarter, in a seasonally weak quarter, they've added one client, and now we have 45 clients in that bracket. So net growth is intact, digital momentum looks strong, but there is a margin miss. And
for takeaways from the TCS numbers, Mitesh, what are the charts saying on TCS?
So I think most of the IT pack, has gone into, after this correction which happened about 2-3 months back, they've gone into sideways activity. TCS, I think a good kind of breakout will happen, at least on the short-term charts, if it starts capturing 1930 zones. Else, expect this 1900 to about 1930 to about 1810 kind of range remain. We have seen 3 important lows on at the levels of 1810. So anything close to that, I would take that as a buying opportunity. And on the upside, if we start getting past 1930, then you would see some momentum come in, and the stock should immediately head towards 2025 to begin with, and maybe even higher levels.
Prakash, TCS tomorrow, where does it go from here?
No, so I think one good thing about the TCS stock price has been it's really not seen any overbuying or exuberance expecting very great results. So I don't think the reaction is going to be very decisively negative, Prashant. But whatever muted reaction you see, I would see it as an opportunity to buy for the simple reason that margin compression has happened in this quarter, but they're still talking about maintaining or improving for the entire financial year, improvement in margin would mean that the next quarter is going to be fairly strong. So if that's it could be a dip, but it could be a buy on dips kind of a thing that will work well in this case.
Okay. Well, thank you for that, Prakash. We are getting into a break. We are coming back with more headlines from the market and more questions that our experts will answer. Just let's leave you with the highlights of the conversation we had with Ajay Srivastava of Dimensions Corporation.
This is going to be a good year for commodity companies. They're very low at this point of time, closer to one-time book value. So you really want an alpha stock. I think commodities will play a big role in this one. Healthcare is going to be the next big one. Not necessarily pharma, but hospital, I think, will do phenomenally well in this year. I think these two themes could play out pretty well for most people because it's a low base, low invested, low owned sectors which you do it. So it's not just an allocation issue, it's also a prudence issue to say that to balance the portfolio, you need to put some money in cash and bond and FDs or whatever you are comfortable with, or NCDs of large AAA rated companies, because 10 to 12% return, if you're managing it, is not going to be easy on the index by and large. You may get in some stocks, but on a portfolio is not going to be an easy game for this year. So not only just to keep the powder dry, but also for a prudent stake, I think that by putting 30 to 40% in fixed income, you'll do a better job with the portfolio than with just riding the equity.
We're taking stock of what happened during the course of the day. We're taking your questions as always. We got through 3 of the top 5 stories. Here's the 4th one. Bandhan Bank announced its third quarter numbers earlier in the day. The bank reported a stellar set with an all-time high net interest margin of 10.5%. This was largely driven by robust loan growth, which grew at 46% on a year-on-year basis. Markets like the fact that the bank was prudent to recognize its exposure to IL&FS as an NPA in this quarter. Remember, after recognition of that particular amount, the profits for Bandhan Bank grew 10%. But as the management explained at the press conference, excluding that, profits would have grown at 90% plus. Latha, IndusInd Bank was the other one which was in focus as well.
Oh, yes. Well, just a word on Bandhan. Actually, loan growth at a scorching 46% is really lower than the 51% they did in the second quarter. I mean, it's a smaller base. So clearly the numbers look very good. But the important point was that they recognized their exposure to IL&FS. IndusInd Bank had reported a mixed set for the third quarter yesterday. So the stock had already reacted yesterday, but today it saw reaction in the sense it ended over 2% in the red. This on the back of earnings, or rather price downgrade by several brokerages, and brokerages lowered the estimates by about 4 to 6% for FY19 and for about 2 to 6% for FY20. HSBC, IDFC Securities have all lowered the price target for the stock, but the price still was higher than the current ruling price of the stock. That negativity in the stock was largely because brokerages are unhappy that some more provisioning has been left for the next quarter. As well, slippages in IndusInd Bank were higher than in the previous quarter.
We got a question coming in, Latha. So Johnson Louis joins us on the phone line from Kerala with a question on IndusInd Bank. Sir, thanks for calling in. What's your question?
Good evening.
Good evening, sir. Go ahead.
Good evening. If it is directed by the regulator to classify the facilities to IL&FS as NPA, the provision created is not sufficient now. Then what would be its impact? If an additional provision, what would be its impact on profitability?
Okay. Well, I don't know if Prakash will be able to answer that offhand because he wouldn't be waiting with all the data. Prakash, if the entire IL&FS exposure has to be recognized as NPA, what will be the impact is what he's asking.
No, so first is the impact will be significant because the overall exposure, when we heard about it last quarter, not the quarter that has been announced yesterday, it was in the range of about 1150 crores, if I remember correctly, and out of which 280 crores got provisioned for, and again a little bit this quarter. So there's still almost like 50% of that which is there. But you know, provisioning doesn't work like that, Latha, and you of course know this much better than me, that this would be more time bound in terms of, you know, as it gets into NCLT discussions, and you know, those machinations would finally tell you that this is where the residual value of this thing is going to be taken. So I think this is a case where people are getting overcautious, which Bandhan Bank did, whereas IL&FS probably took the slightly more optimistic view and said we could probably do it as and when this actually goes bad, and that is where people didn't like it. So it is a matter of conjecture, but I would give the benefit of doubt to IndusInd Bank because they would confidently know that their growth going forward in terms of wherever earnings growth that they are looking at could probably help compensate whatever contingent liabilities that would get created on account of the provisioning. So let's not take a very dramatically negative view on that, but it could probably be significantly large if really things go bad as the gentleman is expecting.
Okay. Well, there you are, Johnson Lewis. There will be a little more provisioning, but not the entire 1200 crore or 1150 crore, because IndusInd will expect to recover some of the assets, so maybe 70% provisioning. It's just one exposure, so I don't think you should worry too much. The stock has already underperformed the bank Nifty a goodish bit. That's the point that Prakash is making. Okay, with that, last headline of the day.
Absolutely. Auto stocks were one of the top gainers in trade today after witnessing a series of losses. I mean, the auto index ended 3%, 0.75% higher, 0.3% higher. The gains were led by the likes of Eicher Motors, Ashok Leyland and Mahindra & Mahindra. Remember, the auto stocks, many of them have lost quite a bit from the beginning of this year. We've got a question. Sharath Raj has got a question. He's holding 11,000 shares of Ashok Leyland. He purchased them at 139 rupees a piece. Ashok Leyland today left off at 95. He wants to know if he should hold or sell. I mean, our auto expert is with us, Prakash. Ashok Leyland, what would you, to tell this gentleman? 11,000 shares, cost is almost 140.
Yeah, so that's quite a bit higher than where we are today at 95. And then my sense is Ashok Leyland will probably see levels which are much below 90. It could probably first level technically, my friends tell me, is 88, where it could test a little bit of support, and then it could also go lower for the simple reason that fundamentally not only sales is an effect, but the overall ability to be able to fund most of the sales is actually vanishing. And then that's happening much faster. So when you look at numbers from indices, when you look at some of the other NBFCs that I've been talking about, there is stress on the commercial vehicle funding part, Prashant, and Ashok Leyland will get impacted. While Tata Motors is kind of recovering its this thing, and I was waiting to hear that name in the top 4 players on the auto side today. So that's making a smart recovery, and that would mean more competitive intensity. So Ashok Leyland, you'll have to wait. If you ask me, I would really not recommend averaging out at this point in time, because the time correction and the price correction could still be some time away.
Okay. Well, thank you very much, Mitesh and Prakash, for staying with us and answering questions. But we are not done with what we picked up from the market coverage today. Bank stocks were under a bit of pressure, and private banks, in particular, the bank Nifty, ended over 0.5% lower. We spoke to SBI's Managing Director, Anshula Kant, on whether the power assets under SBI are anywhere close to resolution. What she told us was interesting. Listen in.
The update is not very encouraging, I would say. It is the same 3 plants which we had originally identified, and those we are hopeful will likely go through. There are a couple more we are still working on. It is, the problem is that there are so many lenders and there are so many different interests, which is actually creating the problem of consensus, getting everybody to say yes. That is an issue.
Okay, that brings us to a close as far as markets today talkback is concerned. Enough global cues to watch, enough Fed commentary to watch overnight like yesterday. And we'll be back with all of that tomorrow morning bright and early. From Latha, me, everyone on the team, thank you very much for staying with us.